good, everyone? Welcome back to another video. This one's not based off of the 10 video series. This is just going to be a video based off of a question I get a lot, which is how to properly backtest. Because some people have been sending me their screenshots and are asking me if this is a proper way to backtest. And I'm noticing that a lot of the people, whenever they do that, they lack something, which is one of the most important things. And this is what separates you from actually backtesting the way that you'd be real trading, and backtesting the way that you're not supposed to be backtesting. Because the whole point of backtesting is to prepare yourself for the live market. So you want to replicate exactly how you'd be trading in the live market. And the thing that people miss out on most is using this daily time frame, because normally you can't even go that far back if you're using the daily time frame. And that's what I want you guys to start looking for, because you can still use the daily bias in your backtesting. And that's what will actually get closer to replicating how you'd be trading in the real market. So I'm going to be on XAU USD, which is the gold pair, and I'm going to show you how you're supposed to backtest. One of the main things is starting from the daily time frame. It's okay to come in the market already knowing what the previous daily candle did and what it's likely going to do, because that's how you actually trade. You come into the market knowing what the previous daily candle did and what your bias is. Once you have the bias locked down, that's when you actually trade your model. That's how you actually take advantage of what your model does. So that's one of the main things that people do wrong, and I'm just going to show you what I mean. So I trade ICT, I trade fair value gaps. Right here is a great example of this. This might be a little too sharp of a move down where we might not even be using any confluences. So let's go look at a different one, but what I was referencing was this bearish fair value gap. Right, once market tapped in, you would know that the next daily candle is likely to be bearish just because it's been respecting the midpoint here. So if you were to hop into the daily time frame right here, see the daily bias, you already know that the next day is going to be a bearish expansion. Then you can hop into the lower time frame, wait for your session, and then actually trade your model. Versus what people do sometimes, where they just backtest to New York session. Then they go back to the next New York session because New York session is the one that they trade. But you're lacking something that's really important. That's actually knowing what the daily candle is going to do. The actual daily bias, which is what you normally have when you're live trading. That's the thing that people are missing. So in this day, right, we're going to be looking for Asia session. One of my models is Asia session breaker block. So we already created a little bbit of a IFVG right here. Boom. Once we disrespected this one, I would already be getting in my position. But we did run a little bit lower, so we're likely not going to tap back into that. Let's see if we get a little bit of a pullback. Okay, we pulled back at least into this new bearish fair value gap, and since we already know that it's going to be expanding towards sell side, we already created the daily wick as well. So all we really need is more of a bearish expansion. And that's what we can get into our trade here and secure our stop loss above this fair value gap and above the IFVG. And this is more of a swing position, right? We are aiming for the swing lows right here. And that's what we got in this day, where we got a ton of bearish expansion. But the whole idea is that you already know what the market's going to do. And the way that you backtest is using the confluences, knowing the actual bias. You can know the bias. As I mentioned, if the daily candle closes like this, inside of the midpoint, you can anticipate that the next day is going to be bearish in the live market. So it's a really good thing to backtest the same way that you would actually be trading with the same tools. So let's look at another example. Let me hop out of this replay mode. Another example where market's respecting a confluence. Let's look at this one. Let's see if this actually disrespected it. No, it didn't right there. So I'm looking for some IFVG or a bullish fair value gap that the market actually respects. Okay, let's look at this candle right here. So here we have another daily candle. Boom. Right? We close right here and we would be backtesting in this new bullish fair value gap, or in this new bullish candle. So right here we have a new daily bullish fair value gap. Upon this candle close, we also got this bullish IFVG right there. Right? So we're pretty bullish coming into this chart. We're looking for some sort of a pullback to continue going higher. So hopping into this next leg on the lower time frame, we're going to be looking for Asia session again. That's the session that I always trade on gold. And we're going to be looking for that daily candle to be created. So look, once the new day opens, we don't have any wick. We don't have any manipulation yet. So we want to see this like daily candle wick be created before the actual expansion happens. The expansion happens past the open. So if the open is right here, this would be the wick, and the expansion would only begin from here, from this above here. So that's exactly what we're gonna be looking for right here. Let me get rid of all this. Actually, I don't need to get rid of that. So let's see. Once Asia session starts, we have a bearish fair value gap right here. That might be the actual confluence that gets us down to this daily fair value gap down here, and potentially this daily IFVG. So we might have even been able to take this trade from Asia session. There you go. So if we're targeting lower, we could even take a trade right here because we're anticipating the daily bias being to sweep these lows and enter into this daily fair value gap. So that's going to be our first trade of the day here. You can see that we're respecting this bearish fair value gap right there. All the bodies are staying within it, and we finally tap into this daily fair value gap. So now that we tapped into it, we're obviously bullish, right? But we can't just catch this falling knife. We don't know if it's going to continue going lower or not. What we need is confirmation. So we're going to go on an even lower time frame and look for a potential IFVG. This would be the first IFVG on the 15-minute time frame if we close above it. So let's see if we dig a little bit deeper. Because honestly, if we tap into this, that would be already such a discount. Okay, we almost closed above it, and there you go. We finally got this close above. That's where we get into our trade from the IFVG. Secure a stop loss under one of the candles. And now we would be getting these 3 bearish candles as an order block. And then we could aim for the swing highs. Look at these equal highs. It's a beautiful target for us. We already have the bullish target. We're inside of London session right now, and we're going to be getting that expansion of the daily candle, right? Because we know that this daily candle is bullish, so everything below the open is just the manipulation wick. The actual expansion happens from here. So we're going to get a beautiful amount of buy side, and we could just close once this high is swept. Boom. There you go. So that's another example of price action being respected because you know the bias. The bias is bullish, so you look for first of all, the tap into the daily target. So from Asia session, we targeted the low. From London session, we targeted the expansion of the daily candle, where we got the wick, and then we got the little bit of expansion towards these equal highs. That's already enough. That's all you really need to know, right? That's how my model works, and that's how I go back into the charts and actually backtest to make sure that this model works properly. That's the same way that I would trade in the live market, and that's what a lot of people are missing. They just hop into the charts like this. Let me go into how most people actually do it, just so you can see maybe this is you. This is how you might do it. You're just going into the New York session like this. Select bar, boom. You're like, okay, let me see if I get the fair value gap. Okay, I got the fair value gap. Let's sell from here. Target the low. Nice. Okay, that my model worked on that day. I'm gonna backtest this New York session now. Okay, we got the order block right there. I'm gonna get into some buys. Boom. Okay, my model worked right there because it tapped into the fair value gap right there and the order block. That's a great model right there. But the flaw is that in a real scenario, your model's not going to be working like this, because if the market's bearish, just because you got this little move towards buy side doesn't mean that the market's going to be drawing higher. It can sweep liquidity and go lower. You have to have a higher time frame narrative. You can't just backtest like this. So I hope you learned a little bit of how you're actually supposed to backtest, how you're supposed to replicate how you trade in the real life scenario in the real markets. So hop back into your charts and make sure that you backtest properly. Catch you guys next time.